Hi everyone, I'm Ken from CryptoTradingKS. If you're new, welcome, and welcome back, KS family. Let's run the numbers. Bitcoin currently up 0.43% to 36,447. Ethereum down 4.78% to 2418. From my 30 plus years in financial markets, I explain the institutional smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth in the process. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. If you're going through a life pullback at the moment, please know that our community's love and healing thoughts are with you. You're not alone. The sun will come out again, and there's always hope. It's really good to think of a life pullback as being on life's roller coaster ride. You have rails underneath you. Yes, you may get into precipitous drops, absolutely, but there are rails underneath, and that momentum down is just transferring into momentum up as you do your next life rally. Rule number 4, price moves in waves. This is an incredibly important rule. Many times people think that price only moves in one direction. It's always moving in a wave. It's always going up and down and then back up. Crypto is incredibly volatile. That's why we must make in advance probabilistic choices. Before you buy or before you sell, you must have 3 decisions already made. What will you do if the price goes down, up, or sideways? Have these 3 in advance choices already determined and stick to them whatever happens. That's really difficult to do, and Rule 774 paints it. Master yourself to master the market. Self-mastery is really difficult, but crypto requires it. The crypto market is not like the stock market. It's not like Forex. The stock market and Forex move incredibly slowly compared to crypto. Crypto is all about implosions and explosions in price. By the time price is turning around, a lot of people miss it. That's why we keep such a close eye on the market every single day. I developed KS Zone analysis to help people understand where they could be in the 4 stages that all investors and traders progress through to become consistently profitable and attain real wealth. Zones 1 and Zones 2 are the stress zones. This is where people get absolutely stressed out by their accounts. They see price movement either going up or going down, and it's really stressful because people want certainty. When price is coming down, people want certainty. How far will it go down? When price is going up, people get stressed. How far will it go up? It's a really big problem when you focus on certainty. Professionals do not focus on certainty. They laugh in the face of certainty because it's a fantasy. There is no certainty inside any market, especially inside crypto. What professionals do is they adopt probability as a mindset. They have a lot of patience and rules, and they move out of Zone 1 and Zone 2 by forgiving themselves for not selling at the top, not buying at the bottom, not capturing every move. These things professionals do not care about. Professionals participate in the market, and they know long term with the right levels of knowledge they can be profitable, and that's what it's all about. If you don't have the knowledge, you're simply gambling. Zone 3 is hence the zone about making money. Zone 1 and Zone 2, how to lose money. Zone 3, how to make money. Zone 4, the meaning zone, how to be happy with what you have. Many people put a lot of money into the crypto market and they don't have the knowledge as to how crypto moves. They don't understand the nature of the crypto market. They don't understand all the connections and interconnections with other markets, and then they get really upset that they lose money. If you don't have the knowledge, you will lose money. It's as simple as that. It's really important to gain knowledge. To be a professional inside the crypto market requires a lot of learning. One thing that we always must look at is the interplay between stocks and bonds and crypto. Bonds, very low risk. Stocks, higher risk. Crypto, very high risk. What we see, bond prices go up when there's a flight to safety. Flight to safety simply means that people are getting out of the stock market and crypto and getting into a safe haven because they feel a crash is coming. When we see that kind of behavior, bond prices going up, we get on alert because we need to be on alert. Rule 138, all investors become traders every time they buy or sell. Investors have a longer term outlook and can afford to actually sit out negative price movements. Traders have a much shorter horizon. They need to understand how the market is moving. Frequently, traders will accumulate in red days. That's what traders do, especially inside the crypto market. Please remember, crypto is completely different to the stock market or Forex. When people don't have knowledge about how the crypto market actually works, not what people are told, but how it works, they can suffer what's called the light switch effect. They can go all in when things look really green and all out when things look red. This is classic Zone 1 and Zone 2 behavior. It's simply related to the fact that people want certainty. They buy when it's green, they sell when it's red, because they're certain when they buy green, it will continue to go up. They don't acknowledge that price is always moving in a wave. They sell on red because they believe it's going to go down. Professionals are very different. They have what is called probabilistic fearlessness. That's Zone 3 and Zone 4 behavior. They layer into trades, buying at levels of support. They can hold negative positions because that is actually what's required in crypto. For example, Zone 1 and Zone 2 would be getting into Bitcoin at the moment. Zone 3 and Zone 4 would look at particular highly red projects and seek to layer in. What you actually see, professionals always look for a discount. For example, Solana has a 7.7% discount right now. If professionals wanted to layer in, and I'm not suggesting that professionals do want to layer in, but if they did, they would buy underneath this current price because they're immediately getting a discount. When sharp angles reverse, when price repairs, and we know that no alt can escape Bitcoin's gravity, these alts do really, really well. And the whole focus within the crypto market is to stack more Bitcoin through the alts. Because of the addiction to certainty in Zone 1 and Zone 2, there are a lot of sleepless nights and a lot of stress. When people hear anything negative, they tend to go all out, and that is a big mistake. That's exactly when professionals are layering in. So if you hear any negative news, don't make that be the news that makes you jump. We have to layer probabilities. We're always stacking probabilities together. That's what Zone 3 and Zone 4 behavior is all about. There are a lot of rules in Zone 3 and Zone 4 behavior as well. And Zone 1 and Zone 2 rules are typically rules of loss. The reason that I moved to that psychological aspect of trading is to make sure that you really understand what all of these things mean. For example, when we have a big spike in fear, which has actually come down substantially, we know that many investors and traders in Zone 1 and Zone 2 are selling these fear spikes. This is in the stock market, but it also carries across to all other markets. It's really important to understand the interplay. When we look at fear spikes, we're actually buyers. We want to buy as traders because these fear spikes can be really, really good. I'm talking about crypto. We look at the main markets because we need to understand the general context and environment that we operate in. When we look at the NASDAQ 100, we can see the NASDAQ 100 broke support and is coming back. But a lot of fear is actually leaving the market. There was a big spike in fear when the markets open, and then that spike in fear collapsed down. What does that mean? When fear comes down, people are buying again. It's all psychological crowd behavior. This is a thing that people generally don't understand when they look at any specific chart. Crowd psychology moves every single chart in every single market. But in crypto, crowd psychology is just wild. What we can also see is oil prices are starting to revert down. They're starting to potentially lose support. We may see downward negative momentum on oil, which would be a good thing because oil adds to inflationary pressure. When we have a look at the bonds, remember before we were talking about bonds, bond prices, when there is a flight to safety. For example, smart money is very, very different to retail money. Retail money treats markets often like a casino, and the house always wins. Smart money is really, really different. They stack probabilities, and that may be hard to hear for some, but it's really important to understand. If you're treating everything like a gamble, ultimately you're going to lose, and that is not what it's about. If you have the knowledge, if you know what you're doing, you will do really, really well in not just crypto, but any other market, but crypto especially. Crypto's volatility is its asset. What we see, bond prices are not going straight up the wall. And that is a really good thing because that's actually telling us the market, smart money investors and traders are looking at the market and saying everything is fine. There's a volatility, yes, absolutely, but there's always volatility. We can see the inverse to bond prices are bond yields. They're relaxing a little bit. It's important to understand gold as well. Gold typically spikes on geopolitical tension, such as Russia and Ukraine, China and Taiwan, and any number of other countries. You name it, there's always some drama unfurling in the world. What we can see, gold is increasing in price, but it's not exponentially taking off. This is really important to understand. We're not getting signals in the market of an impending crash. Does that mean we won't get one? No, it doesn't mean that. There is no certainty. But in terms of probabilities, zone 3, not zone 1 and zone 2, but zone 3, we're not seeing a stacking of probabilities that would dictate that we have to worry. What we're actually seeing is some geopolitical move. Things can definitely change around in the markets, but after the past session's price action, we have a much firmer view of what is happening. The DXY, the US dollar currency index, is also coming down, and it's under a big level of resistance as well. Masterclass students, you will get these live charts in TM6, and we go into extreme depth in the masterclass about what all of this means and what to look for. If we look at the news headlines, we see basically the US stock market coming up. It was deeply in the red territory, but it came up. The Dow has never before closed positive after a 1,000-point drop. What is probably happening throughout the world? We have a confluence of different negative news stories that all have quite substantial impact hidden within them. For example, the Fed steps up talks on shrinking the balance sheet. These rate hikes and the lowering of quantitative easing are things that we've spoken about at length. Also, Russia and Ukraine's on the brink of war. And we have so many different things playing out, as well as COVID, as well as China and Taiwan, as well as so many things. China's Great Wall of Debt through Evergrande. There are literally no shortage of negative news stories that investors and traders, especially in Zone 1 and Zone 2, will dump their positions, but they're dumping it into smart money's hands. That's why I wanted to talk a lot about the panic and the blame zone, Zone 1 and Zone 2, to make sure that you, when you hear negative news, just don't light switch effect. We can see the C19 cases continuing to grow. Worldwide, 354.2 million, and we've seen a really large spike up in daily new cases. The death rate is starting to pop up, and we can see from yesterday there were 2.436 million cases globally. This thing is not going away. What professional smart money mindset traders and investors do is to understand Rule 130. Make volatility your best friend. Volatility is not a problem in the market. It's actually how you make your money. If there was zero volatility, in the crypto market, you would never be able to make any return because the price wouldn't change. What you want specifically to do is look at negative volatility in a very, very different light through the eyes of a professional. Professionals look at volatility as their best friend. They're always seeking to try to capture volatility. The way they do that in Zone 3 is to have a 10-5-10 volatility fund. This is not about greed, but about buying the dip in a very scientific manner based on probabilities. We can see the Federal Reserve has done really well in lowering inflation expectations. They've been coming down substantially since the talk of tapering. And this is exactly what the Fed wanted to do, and central banks all around the world. They find that they can talk something up and the markets will price it in. And that's what we've seen exactly. Masterclass students, you will receive this chart in TM4. To understand how the transportation sectors deal with COVID, for example, stringency, we have to understand if stringency is increasing or decreasing. What is stringency? It's basically closures, school place closures, workplace closures, international travel bans, all of those things. We can see stringency, except for El Salvador. Wow, what a country. In stringency is roughly increasing. We can see Russia's stringency decreasing, Ukraine's stringency increasing, Australia's increasing, France slightly. India has had a big uptake in stringency, and Germany has potentially the greatest stringency throughout the world at the moment. These two factors help us to understand how transportation may be moving around. When we look at this white thick line, that's the New York Stock Exchange Airline Index. We can see the airline index has broken under a level of support. It was starting to repair, starting to turn around. We can see also as the Nasdaq has come down, the transportation indices have also come down. This is part and parcel of how the markets work in concert with each other. Looking at the precious metals, we can see gold increasing, silver decreasing, the inverse DXY increasing. The inverse DXY tends to associate quite well with movements in the precious metals, and we can see Bitcoin doing a little bit of a bounce. We can see that there's any number of storm clouds, but we don't suffer the light switch effect. We just use them as volatility indicators, knowing that the market could come down, and we just place buy orders to capture those long tail rejections. When we look at the Chinese property market, Evergrande is the main thing that people are talking about in the press and the media. We can see Evergrande share price is actually kicking up quite a lot. Confidence is being restored. So therefore, it appears that this $1 trillion of net debt held by these 7 Chinese property giants is not the reason for the sell-off. We can see, and we've been watching this over time, we can see that everything is basically fine inside the Chinese property market. Things are improving. But of course, US denominated debt, they're basically selling for cents on the dollar. I've created a chart here on the Russian market sentiment. I've basically done the Russian market indice, just the particular candle chart in the background, and done 6 of the leading Russian firms so that we can get a comprehension as to what is happening inside Russia's markets. It's not looking good. Since the 12th of January 2022, since Russia started amassing troops, we can see that the prices in the share market have been absolutely collapsing. And it's really interesting to note that most of these giants are actually energy giants. I've taken these 6 giants here and just represented them. This is from companiesmarketcap.com. If we have a look at the first one, Gazprom, we can see that it's in oil and gas and energy. And we know that the oil prices are actually increasing substantially, but these companies are all getting very, very hard hit. You can see even over the past day, this one, Gazprom, one of the largest, decreased by 6.23%. They're basically falling off the cliff at the present time. So we can see the geopolitical tensions between Russia and Ukraine are actually taking a significant toll. Masterclass students, I will make this live chart available to you. Let's have a quick look at the US market. We're looking at the NASDAQ 100. If the NASDAQ 100 goes through a repeat of a black swan, as we saw in the first quarter, these are 3-month candles. What we saw when the US liquidity crisis hit and COVID hit was a 32.1% decrease in the NASDAQ 100. If we actually take that and just parallel it to the current price action, and then we just clone this 32.1% across to the current price action, what we see is the price could fall to 11,246. This is on the NASDAQ 100, and it basically would approximate to this level as well. Don't forget, these are 3-month candles that we're looking at. We're not saying that that is going to happen. We're not suggesting it will. What we can see is there's a actually really interesting line that I've drawn from a long way back. So don't worry about the fact that this line doesn't cut through the candles. This is drawn with the CTKS method. Masterclass students, you would be well aware of what that is. What we're actually seeing is we've had a bounce off this particular support line, and that's come from a long way away. If we get any black swan activity, we could come down to 11,407. It's really early days yet, but just to be aware, it's always good to understand the probabilities. But what is our base case probability? We look at China, Evergrande, the Great Wall of Debt. We can see those companies are improving share price wise. We can see the Russian economy, and this is just a natural consequence of what is happening over there at the moment. And then we look at COVID, we look at the US market, we look at so many things, the intricacies, the interplay between the DXY, gold, bond prices, bond yields, everything. We don't see a full-on black swan. What we do see is a correction, but corrections are a natural part of price movement. Price is always moving in a wave, so to come up means that we need to come down at some stage. That's just healthy activity. Remember, price is always moving in a wave. An interesting thing to note is how Bitcoin has actually reacted when the stock market has come up and down. You can see a degree of correlation, but it's not always absolute. Bitcoin came up really dramatically and then started coming down for its own reasons, many of them to do with the China miner exodus and then news of Evergrande and some other things thrown in there as well. But we can see prices are reasonably correlated between the stock market and Bitcoin. That's exactly why we look at the stock market. If they weren't correlated, we just wouldn't bother wasting our time on it. One thing to understand, professionals love black swans. It is a chance to get in, and they buy on the way down. They stack the probabilities in their favor. They hold on to red positions. A lot of people think that professionals always cut their losses really quickly. In fact, some of the best professionals hold their losses. For example, in the 2008 financial bubble, what happened there? Michael Burry of Scion Capital held on to what was increasingly larger and larger losses. He was made famous by The Big Short movie. And what happened there? He was actually underwater for a lot of the period of time, but he made billions and billions of dollars from that particular trade. It's really important to understand professionals, what you've been told about professionals and how they actually act is very different. I would suggest you watch that film, The Big Short. Apart from being a fantastic film, It's really, really interesting to see how professionals do things. They hold on when everybody else would let go. One reason professionals lean into the market, they understand the nature of percentages, a percentage down and a percentage up. We saw that with this black swan, COVID black swan, prices decreased in the stock market 32.1%, but then in the next 3 months they increased 55.53%, down 32, back 55. This is something to always bear in mind. And the lower you buy, the more profit you make by holding onto it. This is a thing that is lost with retail investors. Retail investors see a big spike, they sell, only to see prices afterwards start repairing. That's because professionals are leaning into the market both ways. You have shorts leaning in, of course, but friends don't let friends leverage, so please do not leverage trade. What you actually see, always buy at spot. What you see in the crypto market is percentages come down all the time. We can get up to 80% reductions quarter on quarter for most cryptos. It's really important to understand this, especially rows that we've been looking at recently. What typically happens, Zone 1 and Zone 2 investors only look at their beloved alt. They actually ignore main markets, they ignore bond prices, bond yields, gold, inflation, DXY, and so many other things. And they also ignore Bitcoin's gravity. Rule 45, no alt can escape Bitcoin's gravity. When we look at Bitcoin's recent price action, we had a sell-off when the US market opened. And then what happened? The buyers came in really, really strongly and pushed everything up. That indicates to us that this 34,178 level is a very powerful support level. What happened to price? It got into these resistance levels up here. And what does resistance do? It pushes the price down. We can see at the moment, the critical thing is to get above this red area. That will occur when we reach 38,935. We're still under resistance, and that is important to understand. We've got a multiple confluence of different resistance levels playing in here, but when we reach 38,935, the game will change. Congratulations to the community members that took advantage of this long tail rejection. That's what we get all the time in the crypto space. Rule 28, opportunities reset daily. Just like in life, every day is a new opportunity. Because we understand Rule 45, we can see that Bitcoin bounced from this support, but it didn't come back and actually touch it. It's showing some strength, and it's showing a lot of strength actually, especially with what is happening. Remember, Bitcoin turns around first. It tends to go down first and turn around first. That's really important when it comes to looking at other markets. We've seen a really large bounce up here. What's happened with Ethereum? We've seen a bounce as well. Binance Coin, another bounce. Unfortunately, we just missed our 332 level. What do we see with Solana? Another bounce. You can see how Bitcoin's gravity is weighing down every single alt, almost. But Luna is doing really, really well. But it always comes back into alignment. XRP is following Bitcoin's gravity. When Bitcoin turns around, it could be fast and it could be furious. The crypto market is all about implosions and explosions in price. It's not slow and predictable like the stock market. Let's have a look at DOT. DOT has reached one of our 10-5-10 levels and just missed the 1543 level. It's really quite interesting to think that DOT was 55.21 on the 4th of November. Now it just narrowly missed the $15.43 10-5-10 level. That's why we put 10-5-10 levels into our trades. It's really important to take advantage of these particular, of the volatility of crypto itself. Looking at Luna, Luna has had a very, very strong uptrend, and we've seen it actually rally very substantially. Well done, Luna. Looking at Doge, Doge has been following Bitcoin's gravity, as has SHIB, as has AVAX. They all follow Bitcoin's gravity. Litecoin, Algo, Chainlink, Uni. And we've seen a bit of power come through on Matic, but ultimately Bitcoin's gravity will win over everything. This is what we must always keep in mind. We can see Matic has come down to a level of previous support. So let's have a look at how Matic goes. It can be quite a strong crypto, and it's exhibited a lot of strength relative to the other ones here. Having a look at the next day, we can see Bitcoin Cash under a lot of duress, but it's following Bitcoin's fingerprint. When Bitcoin turns around, Bitcoin Cash will also turn around. Tron has been selling off just in line with Bitcoin. Again, when Bitcoin turns around, I always say, what happened to your beloved alt? The answer, Bitcoin happened. We can see Tron has sold down to one of our 10-5-10 levels. Incredible stuff. If you think that Tron was back here at around 13 cents to fill at 5 cents, unbelievable. But this is what we know. We know that this is exactly how crypto works. Decentraland, Mana, hovering around the $2 mark, and just following Bitcoin's fingerprint. When Bitcoin turns around, we know what's going to happen. The crypto market is one of explosions and implosions in price. It's an exponential asset class. It's unlike anything that has ever existed. We can see Axie Infinity just following Bitcoin's price action. We'll look at Rose in a tick. VET following Bitcoin's price action. Remember, what happened to your beloved alt? Bitcoin happened. That's why you have to look at it. Why do we look at macro events? Because macro events impact Bitcoin's price. If we don't know the macro events, we'll get blindsided. You can see how incredibly important it actually is. Cosmos, what a powerhouse. Came down, grabbed some 10-5-10 levels, made some people very happy, and now it's trying to surge up to take out this resistance. Going from literally $44 down to 28 very, very quickly. This is the power of the 10-5-10 fund. And we can see FTX token just following Bitcoin's action. We started following Rose a little while back, but the masterclass students know that Rose is an incredibly powerful crypto. When you're up to that particular section, you'll see. What we've seen is Rose has the explosions and then followed by implosions. And we looked at Rose and said, okay, we're getting an explosion in price. So what do? We always buy at support levels below. And that's what we've actually been doing. And we can see many of those support levels have actually been filled. We're currently sitting in a loss in terms of the Rose position. But does this worry us? Absolutely not. That's how professionals like Michael Burry actually do their job. Look at this, so naughty of Rose. Rose came down here to 28 cents and we had a order at 27,907. This is part and parcel of the 10-5-10. You don't always get your levels hit, but we don't care about that. We're just in the market and we're disassociated from the trades either being hit or not being hit. So why do professionals buy at lower price levels? They're actually reducing. They're doing a couple of things. One is they're reducing the average loss, which is important. Every single buy level that's hit reduces the percentage of loss. The other thing that they're actually doing, when price goes the other way, for example, just say Rose was to take off from this particular level and just go back up to its previous all-time high. We can see a 53.57% reduction in price, but to go back up just to the same level is a 114% increase. Down 53, up 114. I like those odds. And it doesn't mean that we seek to do recovery trades. What we may seek is to just layer in and sell for a certain percentage when price spikes up or down. There's a lot of ways of doing your trades. I cover these different methodologies off in the masterclass. By the way, when I place trades, I put real money on rows, and there are significant levels down below the current price. I'm hoping to capture a long tail rejection. Let's see how it plays out. We may or may not get those levels filled, but if we do or we don't is just absolutely irrelevant. We disassociate from the outcome. Developing a diamond mind is what crypto technical analysis is all about. Rule 781, crypto technical analysis is a skill and it's also a philosophy. Understanding the mechanics of money, the differences between wealth and riches, moving into a position where you have knowledge of what you're doing, specifically designed for the crypto market. It's not some rebadged stock market or Forex thing, because stock market and Forex rules don't apply in the crypto market. If you would like to learn these philosophies and rules, you can just look in the description of this video for the masterclass. Looking through the next day, we can see they're just following Bitcoin's fingerprint. Now you can see why it's so incredibly important to understand how the markets intercorrelate. We can see EGLD coming down following Bitcoin's fingerprint and just bouncing a little bit. ICP doing the same. SAND doing the same. Filecoin significantly weaker. Poor old File, just a fantastic project. CHR following Bitcoin's fingerprint. Theta token selling off rather harshly and doing a little bit of a mini bounce there. Ethereum Classic looking really weak. NEAR was doing so well, but we know NEAR can go far, and wherever it is it can come back really quickly. NEAR can be very spiky, and we need to pay attention to this if you're leaning into it. Let's have a look at the community picks. VRA Veracity still under resistance following Bitcoin's fingerprint to a ping. Icon doing the same. Sushi undergoing Bitcoin's gravity. You can see it playing out all the time. IOTA. What happened to IOTA? Bitcoin happened to IOTA. Really good to understand this. LRC, very high performer, is coming down with Bitcoin's fingerprint. The gravity will play into everything. RSR coming down strongly. Audio also coming down with Bitcoin's fingerprint. And Cartesi also coming down. You can see Bitcoin's gravity is a major issue in the crypto market. What is Bitcoin's gravity doing right now? It's coming up towards resistance, multiple levels of resistance. When it gets through those resistance levels, it will start to party, but it's got another resistance level above it at around 42,767. So just be aware that when we get to 38,935, things are starting to look good, but we're not out of the woods yet. What we could tell is that price could still come down. Please be aware of that. Have all your different strategies playing out. Know what you will do if it goes up, down, or sideways, and keep to your word. It's really important to do that. It's really important to understand profits are made by buying. That's why we focus on the buying side of the equation. You can see also that if you buy correctly, you can make profits under any situation, depending on how you trade, what your edge is. But the critical thing is, we always look at these buying opportunities. When price comes down, it's always moving in a wave. I'd like to thank all the very kind and generous community members who've reached out and bought me a coffee on buymeacoffee.com/CryptoTradingKS. Thanks so much, everyone. I'd like to especially thank Vicente. Vicente said, "You open our eyes, we really see the road, and getting rid of the fog is really good." Yes, there's so much fog in the markets. It does take a long time to figure out what's relevant and what is not relevant. Thanks so much, my friend, for your very kind words. Zari, what a lovely thing to do. Hey Ken, I wanted to drink my morning coffee with you today. Very nice. Thanks for your efforts of bringing positive change, and I really appreciate your sincerity, authenticity, and uniqueness in helping and supporting others. I watched a ton of other YouTubers, and that helps me to appreciate you even more and wanting to learn from you and eventually enrolling in the masterclass. Thank you very much again. Zari. Thank you, Zari. That's really very nice of you. John was talking about, can we do a more in-depth technical analysis of the regular stock market? That's what I did for you today, John. I hope it helps. In the last video, we talking about blame in the comments, and such fantastic analysis by the community. I'd like to especially thank Rudy for his very insightful comment. What a rough ride lately on the crypto boat. No one to blame though. This is the really brilliant thing. Like, who would be to blame for bad weather? That is really, really important and very smart. When you think about bad weather actually passes across the markets all the time, and the sunshine does come out as well. Thank you, Rudy, just brilliant. And Rudy says, I'm here for the network effects of crypto, the smart contracts, the changes to the economic system, all of those things. And he's saying, I learned to read and trade the charts while his son learns to read and write words. How beautiful. Kerry said it really well. The only way to get out of zone 1 and zone 2, which is blame, you need forgiveness, and then you can move to zone 3 and zone 4. Forgiveness is really important. Thank you, Kerry. And thank you, Mark, for your very kind comment too. I really like what Joel talked about. Professional traders sit on paper losses. They have no problem with the paper loss. Just think about Michael Burry. Michael sat on at a tremendous loss, but he turned it into billions of profit. Thank you, Rec, for your very kind comment. Now is the time I just zoom out. Zooming out to get perspective is really important. Spend more time in the masterclass and try to analyze what I should have done differently. Badger's comment is incredibly good. Blame can be tough to overcome. It fogs the mind from seeing the bigger picture and gaining better perspective. How brilliant, Badger. This is beautiful. Blame is easier than accountability. That's why we do it. It also allows us to control the narrative, unload some repressed emotional pain. We use blame either to protect our egos, feel superior, or to be victimized. When we blame, we pay a heavy cost. This is absolutely insightful. We lose our personal growth, our power, empathy, healthy relationships suffer, and we lose positive influence over others. And worse yet, it can be contagious. Blame can actually be a contagious disease. Many things that bother us should simply be viewed as water under the bridge whenever possible. If we accept that we're human and have a capacity for error, we can also accept and understand it in others as well. Badger, they're very, very wise words, my friend. One thing that I noticed, because I lectured for many, many years in first and second year statistics, my students used to get really upset with themselves for not getting the correct answer. And I said, please be kind to yourself. You're just learning. When you know what to do, you'll get it right. And that's the same thing in life. Being kind to yourself is really, really important. We have such an amazing community, just filled with very, very brilliant people. It's just a pleasure to read these comments out to everyone. C. Taylor said, when it comes to blame, C does a personal inventory where the destructive emotion is coming from. It's usually fear of not getting something I deserve, fuels the blaming obsession. And that's a really good word, obsession. It can become one. Blame is an incredibly destructive force, and it doesn't do anybody any good, but it's a natural default reaction of human beings. We seek to blame before we seek to understand. What C says, if I'm not the problem, there is no solution. I can't agree more with that. that is really, really important to focus on. For example, if you're not the problem, you can't do anything about it. You become literally victimized. You don't ever want that. You want to take back your power. Your power is really, really important. Thank you, Jason. I never blame others or myself. I just take accountability for the outcome, good or bad, and I learn from the experience. Applied knowledge is power. Dan had some great points. He takes responsibility for his own actions first, learns and grows stronger, but sometimes that's really difficult to do. No doubt at all, my friend. It can be tough. Thank you, Purpuratum, for your very nice comment. Peter says, consciously taking responsibility makes blame and anger fade away and gather strength. Fantastic. CJ said, the one thing that allowed me to move from zone 2 to zone 3 was to understand people see what they have learned to see. Everything else is invisible until they learn how to counteract the energy that blocks their awareness of whatever is unlearned and waiting to be discovered. Wow, CJ, how poetic. Learning is definitely about removing the barriers, and CJ said, one of my struggles is not to put the barriers back up after working so hard to tear them down, keeping an open mind and seeing the invisible. Just prophetic, just beautiful. And thank you to Crypto Turtle. No blame here, only learning. Moving out of zone 2 since I found this channel. Thank you so much, my friend. Gabriel saying, I am primed and ready for the week ahead, mentally written off my paper losses, hoping for a further dip down to fill those cheeky orders, to get over blame, expect and accept mistakes. We can all think that we're just in a school of life and we don't know the rules, and we find them out through trial and error. When you find out a rule of life, you should be celebrating it. And that is because when you understand the rule, you always get it right from after that point, if you actually apply and understand the various facets of that rule. And thank you to Flamingo. Blaming anything outside myself is giving my own power away. It's disempowering. It's better to learn instead of blame. Doing better next time and always learning. Just beautiful, Flamingo. Welcome back, Crispine. It's been a while since we've seen you. Crispine says, I've been going through a bit of a life pullback and clawing my way back. This is really nice. How the community, you can see so many replies by our beautiful community members. We're all about welcoming people, supporting others, and being kind. We can see that there's so many people inside our community who just reach out on a daily basis. I call it the KS family because it's really a globally extended family. It's a beautiful thing. And I've been sitting back a little bit from doing comments, just seeing the people emerging and talking to other people that sometimes don't talk to other people. I love it. I read every comment across all the different platforms every day. And I'm just so proud of people coming out and sharing their life stories and their findings and their various lessons learned throughout their life. It's just really, really beautiful. Thanks so much, everyone. I hope you found the content useful. Please consider sharing and liking this video if you think it will help others. Thank you very much to our moderators for keeping our community safe from scammers. I thought that we could discuss in the comments section, what is the relationship between learning and profitability as it applies to the crypto market? Can you just come into crypto without any learning at all and make money? Or if you have significant amounts of money and you don't invest in your learning, what does that actually mean? Will you maintain your money or will you lose it? What is the concept? What is the relationship between learning and profitability? I think that's a really important thing to discuss. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. I've left helpful links in the description of this video, such as the link to the masterclass. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenario. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.